and welcome to my channel. My name is Ashley, and today we have Ms. Nicole Grogan Alston with us. She is a corporate tax strategist born and raised right here in Atlanta, Georgia. She is a mother of 4 and the owner of DNC Accounting Solutions, DNC Business Solutions, and DNC Academy of Entrepreneurship. And today we are going to be discussing how taxes relate to probate and estate planning. Now let's get into this. Okay, Nicole, can you share with us what tax benefits are associated with charitable giving in an estate?
Yes, definitely. It offers benefits to both the donor and the donees who is actually receiving the charitable contribution. In the lifetime, if a person is still alive, and a lot of people utilize this now when it comes to filing their annual tax return, the 1040, they will give to different type of charity organizations in order to take a write-off because it's ultimately reduced their tax liability. So if you have someone, say you and I say, I'm going to go over to the Boys and Girls Club, or I'm going to go over to the Salvation Army, and I'm going to donate so much money, and I'm going to be able to write that money off on my tax return. However, it is a limit when it comes to the individual tax return to be able to write it off. When you have real estate, stocks and bonds, you can donate it over to a charitable organization. And when you donate it over, you're going to take what is called, again, the step-up basis. So you're going to take an appreciated asset, whether it be real estate, stocks, or bonds, and you're going to donate it over to the charitable contribution, the charitable organization. Therefore, it reduces your tax liability. So it's definitely a benefit in using charitable contributions. They also have different type of charitable contributions, charitable trust that you can set up to where the organization that you're donating to can continue to receive income from you.
Okay.
So it's not
beneficiary.
You can set them up as a beneficiary as well. You can set them up as a beneficiary. You can say, okay, I'm going to set up this trust to have where this organization receive 60% of my assets.
Okay.
And depending on whoever the administrator is over the estate, they may decide to do it all at once, or they may decide to do it over a period of time. And then the other 40% will go to a family member or someone who's designated as a beneficiary. So even utilizing the charitable the charitable trust, is 2 charitable trusts that's out there right now. One of them is the Charitable Lead Trust, and the other one has slipped my mind, but it's the CRT. The R has slipped my mind right now, but it's the CRT. But these are trusts that can actually be set up and used to make sure that your wishes are honored to be able to give to a charitable organization.
Okay. At one point you mentioned within the limit. What is the limit for a charitable contribution? Okay,
so when it comes to a charitable contribution, especially if you're utilizing it on an annual 1040, it's not a limit on an estate, but it is a limit on your annual 1040. And pretty much is 60% of your adjusted gross income. So if your adjusted gross income is $100,000, then your charitable contribution cannot be more than $60,000.
Okay, well, thank you for sharing that with us.
Subscribe to my channel to learn more about probate real estate, financial literacy, and generational wealth planning.